This is Satya Pradhuman of Cirrus Research. The latest signals report is titled "A Nod to Cyclical as the Profit Cycle Finds Its Footing." And a lot of this report centers on this idea that we do have a rotation that seems to be underway, at least from our models. In fact, if you look at the first chart, what's really interesting here is that the market in the last few months appear to be broadening. You've got a very strong year-to-date gain, and yet the asset allocation models to equities remain equity favored. So at the heart of this is this idea about the valuation risk that may still reside in the market. Nonetheless, the allocation models still remain to be equity friendly. In addition to that, probably the biggest change that we're noticing is this idea that our style oscillator, that's the trade-off between growth and value, has been fairly anchored in the growth camp, and that has now started to move more meaningfully into a value tilt. So what this is telling us is that this idea of a soft landing, a profit cycle soft landing that's underway, it appears to be taking its footing, and it seems to be playing out in the equity markets, as in the last few months, we have noticed more of a broadening of leadership. What's important here is that if you look to the follow-through, if this continues to run its course, if you look at trending baskets in terms of the level of the risk, when we look at the large cap basket of leadership in terms of sector exposures, that's to the left, you'll find a sizable exposure to the technology. No surprise in terms of year to date, it's really been a nifty 7 leadership. So what we foresee is that if the market does begin to price in a soft landing, we become more interest rate sensitive. The net exposure to equities will likely see a broadening of markets, potentially at the expense of this sort of lopsided exposure currently. As we go down into the lower cap rung, mid cap, small cap, what you'll notice is a very different exposure. You still have a sizable technology healthcare exposure, but what we're also witnessing is more of a real economy exposure already positioned in the mid-small cap arena. I think that this gets super interesting as we get into the back half of the year and markets and investors begin to realize that the Fed, as originally thought, was going to come to the rescue with interest rate cuts. That's no longer a 2023 event. Take a look. With any questions, please feel free to reach out to us. Thank you.